as a trader, you get to choose not just the markets you want to trade, but you also get to choose the interval. So important. You don't necessarily have to be buying stock on a monthly basis and hoping in 10, 15, 20 years you picked the right stocks. Nope. You can choose to buy and sell on a weekly basis, a daily basis, yes, an hourly basis, and even smaller than that. And you can choose not just stocks, but options, leverage positions, and also these things called futures contracts. And you don't have to always buy. You can sell. You can literally sell something you don't own. It's basically the same. You sell at one price, and ideally, you buy it back at a lower price, putting yourself in a cash position and realizing the profit in between. Is there unlimited risk? There is unlimited risk in shorting or selling if you do not use stops. But we use stops on everything, whether we are shorting or whether we are buying. Even when you buy, you have risk that whatever it is you bought might go to zero. On the short side, yes, it's unlimited because in theory, it can go to infinity. But if you use stops and exits in machinery, then you can, in fact, mitigate your risk. But you need to learn. You need to learn what markets might best suit you, the time frame, the interval, the leverage. As a general rule, the smaller time frame that we use, the more leverage we use. And as we expand further out, we will use less leverage. If anyone is thinking that it is easier to buy or sell something months out, they're kidding themselves. Look no further than the options market. If you want to buy or sell an option that expires tomorrow versus an option, the very same option that might expire 6 months from now, it's going to be much more expensive to buy that option 6 months from now. There's a greater degree of uncertainty. I'm Bagadon at StockMarketCaddy.com. Today is June 28th at 10 a.m. You're looking at our machine called SMC, Stock Market Caddy, the Swing Machine Plus. Let me show you something. On an hourly basis, the S&P on the 60-minute interval went long 14 hours ago. It would have delivered, and you can't buy or sell an individual share of the S&P on the SPX, but 20 points. That would have been thousands of dollars in an option. The fair gauge went short 87 hours ago. On a futures contract, you'd be up $2,500. It went short at 11 a.m. on June 22nd. Now watch this. The ES, the S&P futures contract, 93 hours ago, it went long. At what price? $37.85. At what time? 11 a.m. On what day? June 22nd. What a coinkydink. You'd be up $7,300. The NASDAQ, 93 hours ago, 11 a.m., June 22nd, almost $8,000, $79.60 to be exact. The Dow, 93 hours ago, 11 a.m., June 22nd, at this price. The Russell, the next day, 6 a.m. on the 23rd, 4,600. Gold, actually short, 11 a.m. on the 27th. Oil, long, 8 a.m. on the 24th at this price, you'd be up this much money. Then the nat gas long 22 hours ago on the 27th, you get the idea, and even Bitcoin. I'll let you do the math and add that up. The question is, do you have the patience? Do you have the discipline to learn? Do you have the passion to learn to do something a little different? To give it a try? To buy and to sell? To control and mitigate your risk? To extract maybe not all of this, but just some of this? There are 24 trading sessions in a month if you count Sunday nights. I'll let you do the math on what you can do on a daily basis to generate cash flow. Because you see, what we teach at Stock Market Caddy is trading as a business, extracting cash flow, ideally each and every day, each and every week. If this interests you and you would like to have Swing Machine on your desktop and the many other algos that we have built, the machinery to take out the emotions of fear and greed, you're welcome to give me a call at 813-758-8263. We wish you the best.